Good morning, everyone, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to unpack another exciting day on Wall Street. Yesterday, the Dow Jones Industrial Average edged higher, securing its 8th consecutive day of gains and wrapping up its best week since mid-December. The Dow added about 125 points, a 0.3% increase, showing resilience amidst fluctuating market conditions. The Standard & Poor's 500 wasn't far behind, inching up by 0.2% to close above 5,220, but the tech-heavy Nasdaq Composite barely missed the mark, closing just a tad under the flat line. Now, despite these gains, there was a cloud hanging over the markets. The latest consumer sentiment reading from the University of Michigan took a sharp dive, dropping to 67.4. This marks a significant retreat from expectations and the lowest sentiment level we've seen in the last 6 months. A 13% drop in sentiment during May reflects growing concerns among consumers, possibly about inflation or the job market. Speaking of the job market, it's been a hot topic lately with recent data suggesting a cooling trend, which has ignited a debate on whether the Federal Reserve might cut interest rates sooner than anticipated. However, Fed Governor Michelle Bowman added some context on Friday, suggesting that interest rates might need to stay elevated for a bit longer to counter persistent inflation pressures. It's a narrative that's been echoed by several Fed officials over the past weeks, hinting that we might not see those cuts as soon as some hope. On a brighter note in the corporate world, Taiwan Semiconductor Manufacturing Company, or TSMC, had some good news to share. The chip giant reported a whopping 60% jump in its sales for April, driven by robust AI demand and a resurgence in consumer electronics like smartphones. This boost helped TSMC's shares to climb, offering a silver lining on a day shadowed by broader economic concerns. As we head into the weekend, the mix of strong corporate performance and shaky consumer sentiment sets a complex stage for the markets. We'll be keeping a close eye on how these elements play out, especially with more Fed commentary and economic data on the horizon. That's it for today's Capital Markets Quickie. Make sure to tune in Monday morning as we continue to dive deep into these dynamics and what they mean for your investments. Until then, stay informed and keep investing wisely. See you next time.